has fallen from 400 to 340, while the market has done so well. What's your call on this particular sector now?
Very hard to say. We had gone overweight this sector almost a year ago when we thought the worst was behind them in terms of pricing, and that incrementally things could start to improve because pricing had almost reached the marginal cost of many producers. But I think the recent developments again sort of throw us a little bit into a tizzy. At the one hand, it could be positive for the old incumbents, but I think really every policy decision of the last few years is back on the table, and it is a pretty confusing picture at this point of time. Selectively, we continue to own a few telecom stocks, but right now I would say to take a top-down call on telecom, and given the kind of overhang of policy that is there, is very, very difficult. It's not something that I have a high conviction on right now.
And my final question, Vetri, a lot of people have said that once the UP elections are out of the way, you'll see the government come out aggressively in terms of reforms, and that really would be the last chance for this government. Do you concur with that view, and do you see that happening after the UP elections are over?
I think certainly, once the elections are out of the way, historically we've seen that governments have more elbow room. But really, I think the fact that we need to deal with is that we don't really need, grandstanding of reforms such as FDI in retail. Those might be good for sentiment and newspaper headlines. But the hard kind of reforms that we need are not really those kind of reforms. They are execution-related reforms because, we've got a host of large projects which are stalled at various levels because of red tape, because of issues related to policy implementation and execution. We've got issues on the subsidy front. So really, there are a lot of policies that need to be addressed which are all in the realm of executive decision making rather than in the realm of allowing FDI into insurance or FDI into retail. These are headline grabbing issues, but really if you ask me what's the difference between the economy growing at 7% and 9%, I would submit that that difference will be brought about only by addressing key issues in terms of our ability to continue allowing the subsidy bill to grow the way it currently has been, and also making sure that we can address a lot of the nitty-gritty of policy which is holding back a significant turn up in the infrastructure investment cycle. So this is really in the daily policy making that we need to make improvements, is not about these big reforms that you stand up and announce in a very grand manner.
All right, Vetri, stay on with us. We'll come back with the big story and take your view on that as well. Well, that's all the time we have on first trades. The Nifty has remained absolutely flat for a better part of the opening. Cipla is your stock to watch out for, 4% down on that particular stock. Up next is the big story.
First Trades, presented by BSC, Investors Protection Fund.
Hello and welcome to Market Guru.
The Indian economy in the next 2-3 years will become the third largest economy in the world.
There is something very serious brewing in the global financial markets.
The IT sector in India, has got further.
So what's really playing out here in India?
The market has not been discriminating stocks on the basis of valuations and fundamentals.
In association with Vedanta, creating happiness, and Vinani Cement for generations to come.
India's #1, world's #5 commodity futures exchange. Hedge your risk on MCX. MCX, trade with trust.
Bringing the world closer, looking beyond what is. Soaring to unimagined heights, envisioning a new world. Growing from strength to strength. One world, one journey, one name. Vinani Cement, for generations to come.
India's #1, world's #5 commodity futures exchange. Hedge your risk on MCX. MCX, trade with trust.
I wanted to invest through mutual fund. Keep a far more longer time frame in mind.
Is it advisable to take a loan against the mutual fund investment?
My answer would be no. कोई ऐसा स्कीम है जो छोड़ दिया आपने, सारे खरीद लिए आपने?
Thank you so much, sir.
Whether it is stocks or mutual funds, get the best your money needs every day. Talk money with Vivek Law. Only on Bloomberg UTV.
From the morning snack to the car that drives you and the watch that helps you keep time. From the search engine that gives you answers to the drink that adds a fizz. From the TV that's your window to the world and the jeans that you chill in. From the tablet that you carry to the chocolate that you tuck in and the water you drink. These are the companies that touch our lives each day. But how much do you know about these companies? Join me, Minnie Menon, as I go inside some of India's best-known companies.
It was 1 year ago, we made a promise to stand by you.
I am very thankful to Fight Back team.
A promise to ensure that no company denies you what is rightfully yours.
Fight Back is giving a great support to all the consumers in India.
I would like to thank Fight Back program.
Thank you for your support.
I wish Fight Back all the very best.
Today, after a year, we are happy to have stood by more than 10,000 consumers and brought a smile to their face. So come, let's fight back for your rights.
एक बात समझ लो, डॉन को पकड़ना मुश्किल ही नहीं, नामुमकिन है.
Silence, please. Business aspect, I understand it. It helps me to make the movies.
Your film becomes a brand because people take to it in a certain way.
For a creative producer, it takes a lot of heart. In my creative decisions, I am not thinking about box office.
Hello and welcome to the big story. On Wednesday, the government's empowered group of ministers, or EGOM, will meet to consider stake sales in PSUs via the newly constituted Institutional Private Placement, or IPP route. On the table is divesting stakes in ONGC and BHEL, and among others. With a considerable change in market conditions in the last 2 months, will the government bite the bullet and go ahead? Joining us to discuss this in a 360-degree kind of a perspective is Vetri Subramaniam of Religare Mutual Fund. Arjuna Mahendran of HSBC Private Bank joins us from Singapore, and Ashok Kumar of IPOguru.com. But before we go to our guests, Shail and Priyank, tell us what and how the numbers stack up really over the last month plus, the kind of moves we've seen in the market, and what would be the data that the government, EGOM, would be looking at before taking that decision. Priyank, you go first.
When we talk about the data as to what one needs to watch out for, let's start with the kind of background we've picked up in terms of the auction process and what it actually means when we talk about from a process and how the divestment could actually get impacted. Now, in terms of the auction process, remember SEBI recently introduced the IPP norms and also permitted an offer for sales through the stock exchange mechanism. What it basically is, it's somewhat of a mechanism through a more of a block deal perspective, but this is more towards only institutional investors. Now, if you recollect a couple of months back, in 2011, when markets were weak, you already had a couple of the FPOs that the government had actually planned being there for ONGC, BHEL, all these names had seen a lot of delay. Now, when we're talking about the IPP format, this seems to be somewhat of an advantage in terms from a win-win situation both for the investors and the government perspective. But what's crucial here to watch out is what kind of benefit what will actually have for the retail investors, because they don't really stand to gain in this kind of a scenario. This is only directed towards the institutional investors' perspective, and hence the blocks and the kind of size deal that we're actually talking about won't really have much for the retail investors. That's the other angle which one needs to look at when this whole process is talked about. So, though the divestment target is put at 40,000 crores, this kind of a couple of ONGC, BHE, which are companies where the market is been buzzing with the talks that there could be some auction process being used for divestment in these companies. One just needs to wait and watch as to what kind of benefits does this actually hold, if at all, for the retail investors.
All right. Shail, tell us a bit about how these PSU stocks have been moving since the December lows and the rally after that we've seen. What's expected from the EGOM on this investment tomorrow?
That's right. When you're looking as far as the timing is concerned, if the divestment or if any other announcement comes in from that matter, quite a few of these PSU stocks have done very well for themselves in the last rally that we've seen. It started from the 20th of December. Now let's look at the BSE PSU index. This is an index which has most of the heavier PSUs by market capitalization. It has run up 23% from the lowest levels since December compared to the Nifty, which is run up by 18%. So a clear outperformance of the PSU stocks is what we are seeing. Also, when you're looking at fund flows, you'll see that the kind of money which has been poured in by FIs, over 19,000 crore on the equity side, over 18,000 crore on the debt side, and these are just numbers for the current year. So again, heavy investments also coming in from the FI front as well. The two companies rather which are being spoken about, which will be and probably some announcement may be coming out tomorrow, are ONGC and BHEL. Let's see how these stocks have run up. Now BHEL has run up 18% from the lowest levels in December. Now and ONGC has run up 15.5% since the lowest levels since December. When you're looking at the market capitalization of BHEL, the company's current market capitalization stands approximately at 64,000 crore. ONGC's market capitalization stands roughly at around 2,40,000 crore. Now, when you're looking at 5% stake in each of these two companies, the total adds up just about that 15,000 crore mark. And again, this is probably what the government needs, considering only 3% of its current financial year's divestment target has been met yet.
All right, so let's discuss whether the government will be able to take a decision tomorrow. Should it take a decision tomorrow? That's the big question that we're asking on this debate. Vetri Subramaniam joins us, so does Arjuna Mahendran, and of course, IPO expert Ashok Kumar. Let me come to you first, Arjuna, because it's really been the FIIs that have pumped in money. Do you think FIIs at these levels would be looking at investing through this IPP route in at least two of these bellwether PSUs?
I definitely think so. When you think about it, the entire emerging market story is really now reaching a new phase, which is that in the first run, which occurred in the very short term in January this year, we saw this sort of PE re-rating, if you like, because the macro risks on a global level had subsided, particularly in Europe with that big infusion of liquidity from the European Central Bank. But now we've reached a sort of short-term crescendo at the end of January, early February. And from now on, I think we're going to be much more selective from the FII perspective in terms of a bottom-up approach, looking for robust earnings, and from a macroeconomic perspective, looking for those sectors where the big cost of liquidity, that's from a lending perspective as well as from a government spending and a fiscal pump priming perspective, would come in. So I think adding all that up, the PSUs, particularly the ones you mentioned, look fairly attractive.
Vetri, let me come to you. The manner in which this whole disinvestment process has worked over the years is that there's always this fear that the government has that we don't want to be accused tomorrow of having sold the family silver cheap. I remember that the day the BHEL stock got battered on its earnings, we had the heavy industries minister here on the channel, and he said that, look, the fact that today the stocks got hit, the market conditions are not right, how do we go and take it public? But since then, the stocks reacted, the PSU index, as we just heard, has reacted. So the whole issue of timing, which is again something that you can never predict, never can get it right, whether this is the right time or not. We just got an FII view coming in from Arjuna. Do you think that the time is right for the government, given all the factors? I know that a lot of experts talk of the fact that we could still see another 5 to 10% upside, but rather than waiting for that and timing that, do you think it's as good a time as ever to go ahead and do this disinvestment?
Well, I think, Vivek, for the government to be able to time this perfectly, to be able to sell at the top after the market has rallied, or, for arguably is the same challenge as any investor faces. Can you consistently, pick tops at which you go out and offer stock to the market? And will the market really like it if you start doing that? So I don't think that can be the basis on which government addresses the issue of disinvestment. It's quite unfortunate that this whole disinvestment thrust, which started in the budget 2 years ago, which was all about increasing public participation and all of that, has sort of gone off track now. We're now talking about a purely institutional mechanism. I have nothing against that, and in fact I think we need ways in which companies can raise money quickly and efficiently from the markets. And I think therefore this program, from the point of view of capital raising for all companies and not just PSUs, I think is a very, very positive development as opposed to the FPO methodology, which is just way too time consuming and opens you up to a lot of market risk. So I think the procedure is something which will give the government a lot of flexibility in raising money, as it will any other company that desires to raise money. But I don't think you can approach the issue of disinvestment based on being able to get market highs and market lows right. B, I think we still are in a bit of a strange situation here, where at least I think one of the companies which you talked about, there's still this whole overhang of subsidy related issues for ONGC, and the government has been very, very reluctant to come out and categorically spell out what the policy will be in terms of subsidy sharing. And I think a lot of investors are going to have issues with the fact that if there is no clear policy, we are living this quarter to quarter, and in fact invariably it's just the day before some of the OMC companies are to report results. Does the government come out and speak its mind on how the subsidy is to be shared? So really, how does one take a very constructive view if there is a lack of clarity on policy? So I think there will be some of these company related issues. I think perhaps a lot of the domestic investors might still go for it, but again I think if you just split the two issues, there is a lack of clarity on what this government wants to achieve through disinvestment. B, the mechanism per se that they have chosen, I think is a good mechanism for the development of capital markets in India.
Mm-hmm. So if I were to sum up my question again, this is as good a time as it could be as far as the valuation side is concerned, Vetri. Your larger issue on the policy bit, well taken. But that's exactly the point I was making, that this could perhaps be as good a time, perhaps a month ago or 2 months ago when these stocks were battered, they were fairly down. One could have argued and said, is this the right time? But do you believe that this is as good a time as ever to do it?
What's the benchmark for this, Vivek?
No,
I mean, you just talked about the movement
taking
in the BSE, PSU. I mean, just let me put it in context. Sure. You just talked about the BSE PSU index, and the two stocks that you mentioned have actually underperformed the BSU PSU index on the way up. Now, so you tell me, does that mean this is a good price or is that a bad price? I mean, how do you answer that question? So really, I don't think there is a clear way and you can do that. If you're saying 15% is good enough, then maybe. But if I compare it to the benchmark, then it's actually an underperformer. So should I do it? I don't know.
Sure, that's exactly the point, Vetri. I was only agreeing with you. The point that you made, that timing it to figure out whether this is the right price or not is not something that could ever happen or go right. All I'm saying is, do you think at these price points, or the fact that there has been a bullish undertone to the market after a very long time, gives the government the comfort to go ahead and do it? I mean, you just mentioned that you would probably see domestic investors lapping it up. We heard Arjuna saying that there is enough FII liquidity out there that they would subscribe to it. That's the point I'm asking for.
Well, in my opinion, without getting into a discussion on the companies, frankly, in companies where there is a lack of clarity on how their earnings are going to be determined, and if it's going to be determined at the end of every quarter based on a policy that really doesn't exist, I think a lot of investors are going to have a serious issue with investing in such companies.
Okay, point taken. Ashok, let me come to you. We've been talking about the mechanism, and you would understand this mechanism better than anyone. Will you, to start with, tell our viewers really what this mechanism could mean? Could it mean that we decide tomorrow and as early as day after we could be over and done with this stake sale? Is that the way it would work? The issues that Vetri raised, on clarity in terms of disclosures, are these guidelines less stringent instead of actually going out and doing the whole offer document process? How does that work?
Far less stringent, Vivek. Let's start at the correct point is that the government needs these funds. There's a gaping hole in their budget. They need this desperately. So, I don't think they're going to be awfully bothered about the timing. I think that they've sort of got SEBI to adopt a mechanism which is favorable to them. I think they're going to hit the market running because you have a market that is now on the rebound, and they need to meet this target before March 31st. So there's no question, and I would agree with Vetri that there's no right time as such for the government to do it. If you look at what happened in the past, whenever they announced an FPO, I think the stocks got hammered down. Then there was the issue of retail discount. All in all, it was a mess. The government was selling its stock very cheap. I mean, nobody really benefited because the stock was hammered down even before the issue. And doing an FPO is extremely difficult. It's not just for the government. There's a moving target, which is the secondary market price. So here it's a far more efficient process. You hit the market running and you get the best price you can at that given point in time. So to that extent, yes, I think it's a good mechanism. The caveat being that the retail investor gets entirely left out, which to my mind is not fair, because it's largely the taxes of the retail investor that built these companies.
So coming to my other point, when the disclosure norms that I talked of, the very critical point that Vetri raised, that some of these companies have their own overhangs, policy-related overhangs, which normally in the course when you would file your offer document, you would have to give details of them, you would have to outline what's really going on as far as the company is concerned. Are we saying that in this case it would be probably a one-pager? How would the process work in terms of the placement? Because if the time is so short, and which is why perhaps the government's gone in for it in the very first place, how would that play out?
Yeah, certainly. I think the disclosures would have to be there, but they would be a summary disclosure. And further, you're assuming, since we are talking about the top 100 market cap companies, you're assuming there's adequate public information in place already, which is the presumption for using this method. So to that extent, I think most investors would be aware of what they're getting into. But I once again second Vetri's point, which is that there are grey areas still. But my hunch is that the government is not going to be too bothered about those grey areas. And mind you, Vivek, there is a further cushion that the government has given itself. Domestic financial institutions can also participate here, including the government institutions. And my feeling is that if there are less takers because of clarity issues, the government institutions will step in which case it would be a self-defeating exercise.
Okay, that's an interesting point. Arjuna, let me bring you in here on this. You've heard both the other experts talk of it. As a global investor and in other investors that you would talk to, two issues here. One is, of course, whether you would invest in these companies, the point that you made. By and large, people would. The more important point, how critical is it for the government right now? Is it even an option, staring at a fairly decent hole in terms of its disinvestment targets? And therefore, on a more larger issue, even from the market's point of view, perhaps going ahead and doing this may make sense?
It definitely makes sense. I mean, obviously it's difficult to try and judge how things look in Delhi as opposed to looking in from the outside. But clearly, looking at emerging markets as a whole, we are, as the previous speaker said, on an upswing. So from that perspective, these upswings in these sort of turbulent markets, given that there are sizable macro risks out there, such as oil prices, gasoline prices in the United States are heading towards $4 a gallon, which is sort of tipping point for the U.S. consumer. Then we have these geopolitical issues in Iran, etc. All those could, cut this rally quite short. And we've got accustomed to that over the last couple of years. We have these alternating periods of risk on and risk off. So from that perspective, I think, the government has a pretty small window. And I think that's probably the sort of thinking that has guided them to adopting this particular mode of divestment, which I concur with. Going to the second half of the year, there are significant storm clouds just lying in the wing, if you like, that could come in and make the global risk environment much more adverse than it currently is. So I would say that it definitely is a window of opportunity for the government, and also from a longer-term FII perspective, who's really looking at the emerging market story unfolding. I firmly believe, for instance, that we are seeing a gradual process of decoupling, pretty much like what we saw way back in the early 90s, when you may recall the Japanese market went belly up, and we saw a diversion of liquidity flows away from Japan, which then was the second largest economy and market in the world, away from Japan and into emerging markets. And then we saw that big boom in risk assets across emerging markets in the mid-90s, which went all the way till 97 and the Asian crisis. So, if we saw a replay of that, and just substituting Europe for Japan in that situation, Europe today is in a lull. It's probably going to last a few years, and you could see a diversion of liquidity away from Europe into emerging markets. So I think FII are coming from that perspective. They're trying to take significant stakes in growth areas in the emerging markets in anticipation of a multi-year sort of decoupling and re-rating process. And that makes it very attractive from an investment perspective.
Vetri, let me come to you on two issues which probably indicate the urgency with which the government seems to be keen on at least going ahead with the disinvestment. First up, very, very quickly it gets SEBI to come out with a whole new set of a mechanism to actually go ahead and do this. We've seen it happening so fast. We don't usually see such things happening so fast at the regulators, and clearly it was the government wanting this mechanism in place quickly. Secondly, if reports are to be believed, and what we've heard is the fact that the government is actually overruling an IRDA diktat to say LIC can go past 10%. Because it wants LIC to go out there and be able to, invest its money or funds. Leave aside the two issues. I'm not asking you to comment on these two developments, but what I'm trying to understand is, does that, as even Ashok alluded to, point to the fact that the government's urgency seems far more, to be able to meet these targets, and is that a good thing?
Well, I don't think they have the option, as Ashok said himself. I mean, the fiscal deficit is a very big issue. And, I think this is really more about the niceties of what they want to report. And therefore, they want to make sure that when they come out and report the fiscal deficit, it looks to be well under control. And that's why they're pushing through all these proposals in a big, big hurry. And I just want to add one point over here, Vivek, which really makes me smile, which is that if you actually look at what's happened during the course of this year, between the kind of money that the government of India has had to pump into the public sector banks, including, I think, the announcement that they would pump in further money into SBI in their rights issue or through a preferential, they would actually end up spending more money investing into PSU companies than they would most probably raise by way of disinvestment. So, somewhere I think this whole policy has gone off the tracks, and there is a need for a lot of serious introspection, which I don't see happening. And instead, just to highlight the 2 points that you made, we're just making up policy on the fly because we just want to make sure that we hit one magical number, which is that the fiscal deficit should be, 4.6% or as close to 4.6% as we can get it to be, and all means are acceptable.
All right, we leave it there, gentlemen. Thank you very much, all three of you, for coming by. Let's wait and watch what happens tomorrow. But clearly, it's a government which is in a great bit of hurry to make sure that that one big magic number gets achieved. How it does, whether that's the right way, that's a question still up there in the air. But we'll know more tomorrow once that EGOM meeting happens. For now, thanks for watching The Big Story.
I wanted to invest through mutual fund.
Keep a far more longer time frame in mind.
Is it advisable to take a loan against the mutual fund investment?
My answer would be no. कोई ऐसा स्कीम है जो छोड़ दिया आपने सारे खरीद लिए आपने?
Thank you so much, sir.
Whether it is stocks or mutual funds, get the best your money needs every day. Talk money with Vivek Law, only on Bloomberg UTV.
India's #1, world's #5 commodity futures exchange. Hedge your risk on MCX. MCX, trade with trust.
कभी कभी जिंदगी के प्लान आपके प्लान से थोड़े अलग होते हैं। ICICI लोम्बार्ड हेल्थ इंश्योरेंस, ताकि आपके प्लान्स को जिंदगी की नजर न लगे। ICICI लोम्बार्ड, आपका प्लान बी।
ये है इस छोटे से गांव की छोटी सी बिन्नो, और ये है इसका स्कूल।
मैं रोज स्कूल जाती हूँ।
इसके माँ बाप ने शायद अपने बचपन में स्कूल देखा भी ना हो। ये है बिन्नो के दो भाई, गोश्तो और नंदू। बचपन में इनके पिताजी के भी दो भाई थे, पर वो रहे नहीं। ये है गोश्तो का छोटा सा खिलौना।
बिजली से चलता है।
इसके पिताजी के पास न तो ये खिलौना था और न ही बिजली। बिन्नो की आंखों में बहुत से सपने हैं,
बड़े-बड़े सपने।
इसके माँ बाप की आंखों में सिर्फ 3, बिन्नो, गोश्तो और नंदू। हर माँ बाप के सपने होते हैं उनके अपने बिन्नो, गोश्तो और नंदू। एक एक करके इन्हीं सपनों को हम साकार कर रहे हैं।
India's #1, world's #5 commodity futures exchange. Hedge your risk on MCX. MCX, trade with trust.
It was 1 year ago. We made a promise to